You're not failing at trading because the market is impossible. You're failing because you've turned something simple into something painfully hard. Here's the truth. Most traders never accept. Most of the time, the market is basically a coin flip. At any given moment, price can go up or down with roughly a 50/50th probability. No magic, no certainty, just randomness with brief moments of order. Your job as a trader is not to predict the future. Your job is to wait for those short moments when the odds tilt slightly in your favor, maybe 60-40, and place a small controlled bet, not 90-10, not 80-20, just 60-40. And here's the part that should hurt a little. Those moments are not rare. They happen every single day, multiple times a day. You're just missing them. Why? Because you're drowning in noise. Look at what you're doing right now. You've got multiple screens open. Your charts are covered in indicators, RSI, MACD, moving averages, oscillators, bands, signals you don't even remember adding. You're in Discord groups arguing with strangers. You're refreshing Twitter every few minutes. You're reading economic reports written in language you barely understand. You're staying awake at ridiculous hours watching sessions that have nothing to do with your strategy. All of that effort just to find a tiny edge that's already visible on a clean chart. The market doesn't reward effort. It rewards clarity. And clarity never comes from adding more. It comes from subtracting. Every indicator you add feels productive, but it isn't. Each new layer of analysis pushes you closer to hesitation. You think you're building a system, but what you're really building is a cage. A cage made of rules, confirmations, and conditions that trap you in indecision. Let's be clear about something. Trading is not easy, but you are making it far harder than it needs to be. There's a huge difference. What actually matters in trading can be boiled down to a few core elements: price movement, volume, basic support and resistance, and market structure. That's it. You could learn everything you need about these in a month if you focused. But instead, most traders spend years collecting tools they never truly use, memorizing patterns that don't exist, and chasing strategies that promise certainty in a game where certainty is impossible. This is why you hesitate. You need just one more confirmation to enter. You can't exit because maybe it'll come back. You can't evaluate your strategy because you change it every week. You're stuck waiting for certainty that will never arrive. And here's the brutal irony. While you're waiting for the perfect setup, the mythical 90-10 trade, the real opportunities are passing you by. The 60-40 moments show up again and again, but you ignore them because they don't look perfect enough. Perfect is the enemy of profitable. The traders who make money aren't smarter than you. They don't have secret indicators. They're not part of some hidden group. They've simply accepted a reality you're still fighting. Trading is a game of probabilities, not predictions. They act on small edges and let time do the heavy lifting. You're searching for certainty in a place where it doesn't exist. Let's talk about what a real 60-40 moment actually looks like, because you're probably imagining something far more complex than reality. Picture this. Price has been ranging between two levels for the past hour. Support has been tested 3 times, and each time buyers stepped in. Now price comes back down for a 4th test, but this time volume is lower. Sellers are pushing, but with less force. That's not random. That's exhaustion. Sellers are running out of momentum. Buyers have defended this level repeatedly. The odds aren't 50/50ths anymore. Maybe they've shifted to 55/45ths, maybe 60/40ths. The exact number doesn't matter. What matters is that the balance has changed slightly in your favor. That's the trade. You don't need RSI confirmation, you don't need MACD crosses, you don't need to check the economic calendar or wait for someone on Twitter to agree with you. You recognize the shift in probability, you bet small, and you let the market decide. Small is the key word here, because this is where most traders destroy themselves. You're treating every trade like it's the trade, the one that will change everything. So you oversize your position, you load up emotionally. You convince yourself this one has to work, but it doesn't have to work. It can't always work. A 60-40 edge still loses 40% of the time. When that loss happens, you spiral, you question your system, you abandon your plan, You go hunting for a new strategy, and the cycle starts again. Professionals don't trade like this. They're not emotionally attached to any single trade. They make small bets on slight edges, again and again. You're trying to win every trade. They're trying to win over time. You're chasing perfection. They're exploiting probability. When you strip away the complexity, something powerful happens. You start seeing what actually moves price. Not what an indicator says might move price, but what's happening right now. Buying pressure, selling pressure, momentum, exhaustion. These aren't abstract concepts. They're visible forces. When buyers keep stepping in at the same level, that's information. When sellers fail to push price lower despite multiple attempts, that's information. When volume expands on upward moves and contracts on pullbacks, that's information. Everything else, every indicator on your chart, is just a mathematical interpretation of this raw data. So ask yourself, why are you trusting the interpretation more than the source? Overcomplication also creates dependency. You become dependent on conditions aligning perfectly. If one indicator disagrees, you freeze. Meanwhile, price keeps moving, creating opportunities right in front of you. The market doesn't care about your indicators. It moves based on supply and demand, fear and greed. Those forces are always present, and they're always visible, if you're not blinded by noise. Here's the irony. The moments you're searching for aren't hidden. They announce themselves. Breakouts with volume, clear support turning into resistance, momentum accelerating after consolidation. They're obvious, but you miss them because you're waiting for permission from your tools. By the time all your indicators align, the move is half over and your risk to reward is terrible. You're driving forward while staring in the rearview mirror, wondering why you keep crashing. There is a reason casinos make money with a tiny edge, sometimes as small as 51 to 49. They don't need certainty. They need repetition. They play the odds over and over, knowing the math works out in the long run. You're in the same business. Each trade is just one hand in an infinite game. The outcome of any single trade doesn't matter. What matters is the distribution of outcomes over hundreds of trades. But you'll never reach hundreds of trades if you spend days analyzing each one. Here's something nobody talks about. Complexity drains mental energy. By the time you place a trade, you're already exhausted. Your focus is gone. Your emotions are fried. Simple systems preserve energy. You see the setup. You take it. You manage it. Done. You're ready for the next opportunity. Complex systems burn you out. By the third trade, you're second-guessing everything. By midday, you're too tired to execute the best setup of the session when it finally appears. Energy management. Part of trading, even if it isn't glamorous. So how do you find 60 to 40 moments without overanalyzing? You look for imbalance. When the market is balanced, it's 50/50ths. When imbalance appears, probabilities shift. Imbalance looks like buyers overwhelming sellers, sellers overwhelming buyers. Strong volume on one side, momentum holding where it shouldn't, or breaking where it should have held. You don't need to calculate it precisely. You just need to recognize it's happening. Then you act, and you get feedback quickly. This is why clean charts matter. You start developing feel, not intuition based on luck, but intuition built from repetition. Just like driving a car, it becomes automatic over time. But you can't develop feel while staring at indicator soup. You're one step removed from reality. The best traders are bored most of the time. They wait. They do nothing until their pattern appears. Doing nothing is a position, and often the correct one. Most traders can't sit still. They force trades to feel productive. And they lose. When you simplify, you trade less, but better. You stop justifying bad trades. You stop lying to yourself. Over time, you build a mental library. You have seen this scenario 50 times, 30 times it worked, 20 times it didn't. That's your 60 to 40. That's real edge. Trading isn't about being right. It's about playing probabilities with discipline. Simplicity isn't weakness. It's strength. And until you accept that, the market will keep teaching you the same lesson, over and over, at your expense. There's something dangerous about complex trading systems that nobody warns you about. They don't just confuse your charts, they confuse your thinking. The more layers you add, the more dependent you become on conditions lining up perfectly. You stop responding to the market and start negotiating with it. All your indicators need to agree. All your signals need to confirm. Everything needs to look just right. And when one small piece is missing, you freeze. Meanwhile, price is moving. Buyers and sellers are fighting in real time. Opportunities are forming, resolving, disappearing. And you're not participating because your checklist isn't complete. The market isn't waiting for your MACD cross or your Bollinger Band squeeze. It's moving based on supply and demand, fear and greed, momentum and exhaustion. Those forces are always there, always visible. But complexity blinds you to them. Here's the cruel part. Most of the setups you miss were obvious. Clean breakouts, strong rejections at key levels, clear trend continuations. They weren't subtle. They didn't need interpretation. They announced themselves. But you ignored them because you were waiting for confirmation from indicators that lag behind price. By the time everything lines up, the move is already halfway done. Your entry is worse, your stop is wider, your reward is smaller. Even when you're right, the trade barely pays. And when you're wrong, it hurts more than it should. You're trading the past, not the present. Indicators don't predict movement. They describe what already happened. They're the rearview mirror. Price action is the road ahead. You're trying to drive forward while staring backward and wondering why you keep crashing. Think about casinos for a moment. They don't wait for certainty. They operate with tiny edges, sometimes barely better than 51 to 49, and they repeat those bets thousands of times. That's how they win. You're trying to do the opposite. You want to bet only when you're almost sure. You want to feel safe. You want guarantees. But markets don't offer guarantees. They offer probabilities. And the traders who accept that reality are the ones who survive. A 60 to 40 edge is more than enough if you're willing to repeat it. But repetition requires simplicity. You can't repeat a setup that takes hours of analysis to justify. You burn out before the math has time to work. There's another cost to complexity that most traders never notice: mental fatigue. Every indicator demands attention. Every signal competes for priority. By the time you enter a trade, your mind is already tired. Your emotions are already stretched. Simple systems preserve mental energy. Complex systems drain it. With simplicity, execution becomes automatic. You see your setup, you act, you manage, and you move on. With complexity, every trade feels heavy. By the third or fourth trade, you're second-guessing everything. By midday, you're exhausted. And the best setup of the session often appears when you're too tired to act on it. Energy management is part of trading. Ignore it, and you'll sabotage yourself without realizing why. So how do you actually trade without drowning in analysis? You stop trying to predict and start learning to recognize imbalance. When the market is balanced, it's random. That's the 50/50th zone. No edge, no reason to play. When imbalance appears, probabilities shift. Slightly, but enough. Imbalance shows up in simple ways: buyers overpowering sellers, sellers failing to push price lower, volume expanding in one direction, momentum holding where it shouldn't, price breaking levels it should have respected. You don't need to measure these perfectly, you just need to see them happening. When you do, you place a small bet and let the market respond. If you're right, momentum continues. If you're wrong, it stops. Either way, you get fast feedback. That feedback is gold. This is why clean charts matter. Over time, you develop feel. Not intuition based on hope, but pattern recognition built from repetition. Just like driving, it becomes instinctive. But only if you're actually watching the road. Most traders never develop this skill because they're staring at indicators instead of price. They're reading translations instead of the original language. Something gets lost in the process. The best traders aren't constantly trading. They're mostly waiting, watching, doing nothing. And that's not weakness. That's discipline. Doing nothing is a position. Market only offers good odds occasionally. The rest of the time, it's noise. Forcing trades during noise is how accounts bleed slowly. The professionals wait for clarity. When it appears, they act decisively and without hesitation. Simplicity also makes execution cleaner. With complex systems, exits are a nightmare. Too many signals tell you different things. You exit early because one indicator flips, or you hold too long because another hasn't confirmed yet. With price-based trading, exits are simple, momentum fades. Target is hit, stop is hit, 3 outcomes, no confusion. Over time, something powerful happens. You build a mental database. You've seen this scenario before, many times. You remember how it usually resolves, not with certainty, with probability. You've seen it 50 times. It worked 30 times. It failed 20 times. That's your 60 to 40. That's real edge. Trading isn't about being right. It's about consistently acting on small advantages and letting time do the work. The market is mostly noise with brief periods of direction. Your job is to participate in those periods and step aside when they end. You're not here to predict the ocean. You're here to ride waves. And the irony is this: the biggest wins usually come from the simplest setups, clean breakouts, obvious reversals, strong trends, nothing fancy. The trades that require heavy justification are usually the ones without real edge. Complex systems let you lie to yourself. Simple systems force honesty. That honesty is uncomfortable, but it's profitable. Most traders would rather feel smart and stay broke than feel uncomfortable and make money. Don't be most traders. Strip it down. Focus on price. Bet small. Repeat. That's trading.